Turning to the economy, encouraging jobs numbers help make this a good week on Wall Street. The Dow Industrials jumped 167 points on Friday to close at a record high of 15,761. This followed an unexpectedly solid jobs report for October when employers added 204,000 workers. Still, the Labor Department said the nation's unemployment rate edged up 0.1% to 7.3% from September's 5-year low. That's due mainly to federal workers who were idle during the partial government shutdown. Let's talk it over now with Bloomberg TV anchor Deirdre Bolton. Deirdre, good morning.
Good morning. Great to see you.
Thank you for being here. So all eyes were on this government shutdown. Everyone wondered what would be the trickle down. Was there a trickle down?
Well, there was a trickle down in the fact that basically more companies had more time because the report was delayed to hand in their data. So that actually did end up skewing the numbers. And I mean, you just mentioned you actually had a more optimistic figure come in, 204,000 jobs added to the economy, than any economist expected. So it was great. You had this high. The scary part to this report, though, is the participation rate. So that is to say the number of people just giving up on looking for a job.
It's a 35-year low.
A 35-year low, which is really frightening, right? Because that just means more and more people are just saying, forget it. I can't find anything.
How much of that was government shutdown, though, do we think?
Some of it is an anomaly. So at least the economists that I've spoken with, Anthony, say, honestly, you have to just take out both outliers. That is to say, you take out the great number, the great print that we got, also take out that scary participation number. Bottom line is, this whole report, I'm sorry to say, is worth ignoring. We're going to get another one more before the Fed has to make its next call. And so there we go.
But there was a glimmer of hope. We saw some job growth. What sectors was that in?
So you had manufacturing, you had retail. These were really the big ones. And of course, we're really retail focused as we're coming up on the holiday season. Amazon last year hired it took me about 70,000 people as temporary workers. They did actually convert to some full-time employment last year. So Amazon saying they're going to be hiring 70,000 temporary, and some of those will be converted.
Right. I mean, from what I've heard, the holiday hiring is going to be about what it was last year. I mean, we seem to have been sort of stuck in this rut now for a long time. We're averaging, I think, 190,000 jobs created monthly over the last year. At what point do we start to see this kick up, do you think?
Well, that's a great question. And a lot of people are saying, you know, certain kinds of companies are waiting for confidence to pick up. But here's the other thing that we don't talk about a lot. There's about 3 million jobs per month that are just not being filled by Americans. And one of the problems is the technology, the science, and the math background needed to fill them. So there are jobs. They're just not jobs that every single person can do.
But this week we saw the market spike. I think a lot of people also wondered, does that have an effect on the Federal Reserve stimulus program?
Well, I mean, obviously, it's a feel-good factor, right? But as far as affecting what the Fed does, probably not. I mean, the Fed is worried about inflation. The Fed is worried about job creation. And most people think we're going to be getting, obviously, a new Fed chairman in Janet Yellen. Most people think the stimulus will continue through March, but that's one reason, just bringing it back to why you are seeing such strength in the equity markets. I mean, look, money is cheap right now. That's good for investors.
Yeah, we also had a rather notorious IPO this week, initial public offering.
Yeah, you had a 75% pop that first day for Twitter.
Yeah.
I tweet, you tweet, I follow both of you, so we're all on it. Now, you did have a little bit of the euphoria coming on the next day. You know, yesterday you had Twitter close down 7%, but when you pop up 75% the first day, who cares, right? So Twitter raising $2 billion in an IPO. That's actually the biggest raise. I think you have to go back to Alibaba 2007. So some pretty strong figures there. Of course, what we were talking about, right, is that it's still not profitable. This is a big bet on ad spending, and we'll see if it works out. So 70% of Twitter's revenue actually is coming from mobile ad spend. Facebook's, just to give you the comparison point, about 50%.
Right. Nonetheless, we saw some billionaires and millionaires made yesterday.
Certainly did.
Thank you so much for joining us.
Sure thing.